When considering long-term investments, particularly in dividend-yielding stocks, it's essential to choose companies that not only provide steady income but also demonstrate potential for sustained growth and stability over decades. In the constantly shifting landscape of global markets and economies, investors seek the relative safety of well-established companies with strong market positions, innovative capabilities, and sound financial health. Here, we delve deeper into 7 such stocks recommended by Argus analysts, all of which offer attractive dividends and the prospect of enduring appreciation in share value. J.P. Morgan Chase & Company, JPM, with a forward yield of 2.4%, J.P. Morgan represents a pillar of strength in the financial sector. Holding assets around $3.6 trillion, J.P. Morgan not only survived the 2023 U.S. regional banking crisis, but emerged stronger by acquiring assets from the failed First Republic Bank. This strategic move has significantly enhanced its net interest income, a critical metric for banking profitability. The acquisition underscores J.P. Morgan's ability to seize growth opportunities even during periods of market distress, positioning it as a resilient investment for the long haul. Analysts have set a robust price target of $215, suggesting confidence in its continued market leadership and financial performance. Procter & Gamble Company, PG, this consumer staples behemoth, yielding 2.4%, is a testament to enduring brand value and market adaptability. Owning a portfolio of ubiquitous brands like Pampers, Tide, and Gillette, Procter & Gamble thrives by continually innovating and improving its product offerings. Its recent initiatives, such as the introduction of Dawn Powerwash, highlight its commitment to meeting consumer needs through innovation while achieving market share growth. Furthermore, its ability to hike dividends reflects its solid financial footing and optimism about future profitability. Johnson & Johnson, J&J, yielding 3.3%. Johnson & Johnson stands out in the healthcare sector for its diversified operations spanning pharmaceuticals, medical devices, and consumer health products. Following the strategic divestiture of its consumer health business, Johnson & Johnson is doubling down on its high-growth sectors, pharmaceuticals and medical technology. With an exciting lineup of new drug launches and ongoing investments in cutting-edge medical technology, Johnson & Johnson is well-positioned to deliver sustained growth, making it an appealing choice for long-term investors. Home Depot Incorporated, HD, with a forward yield of 2.6%, Home Depot is capitalizing on critical demographic and economic trends. As the largest home improvement retailer in North America, Home Depot is set to benefit from the significant underinvestment in U.S. housing. With a large portion of U.S. homes needing repairs or renovations, coupled with a generational shift as millennials enter the housing market, Home Depot's growth prospects are robust. Analysts predict that investment in housing and home improvement could rise to as much as 5% of U.S. GDP, offering a clear runway for Home Depot's expansion. Merck & Company Incorporated, MRK, this leading pharmaceutical company, with a yield of 2.4%, continues to dominate with high-impact drugs like Keytruda and Gardasil. Merck's strategy involves continuous innovation and expansion of indications for existing drugs, ensuring a steady pipeline of high-revenue pharmaceuticals. This focus, combined with strategic acquisitions in the $1 billion to $15 billion range, positions Merck to maintain its growth trajectory and profitability, essential for long-term investment viability. Chevron Corporation, CVX, as a major player in the energy sector with a forward yield of 4%, Chevron's strategic acquisitions, such as the impending purchase of Hess Corporation, significantly bolster its asset base and production capabilities. This move is particularly strategic as it enhances Chevron's footprint in the lucrative offshore Guyana region and the Gulf of Mexico, ensuring long-term growth in its production and reserves. Coca-Cola Company, KO, yielding 3.1%. Coca-Cola is more than just a beverage company. It is a global icon that has adeptly navigated shifting consumer preferences. By diversifying its portfolio to include healthier options and expanding into new markets like coffee through the acquisition of Costa Coffee, Coca-Cola is repositioning itself for the future. These strategic moves ensure that Coca-Cola remains relevant and profitable, making it a prime candidate for long-term investment. Investing in these companies offers more than just the potential for dividend income. It represents an opportunity to participate in the growth of global leaders across diverse industries. Each company's strategy for innovation, market adaptation, and financial management makes them suitable for investors aiming to build a durable, yield-generating portfolio designed to withstand and capitalize on the complexities of the global economy.